Hello, I'm Keith Herman, and welcome to Funding and Disrupting. We're excited to welcome our guest, Nathaniel Harding, the managing partner of Cortado Ventures. Nathaniel has a fascinating history. He graduated cum laude from the University of Oklahoma with Russian language and mechanical engineering degrees and earned an MBA from Oklahoma City University. He's also a decorated Air Force captain, veteran of Afghanistan, where he was embedded with the US NATO headquarters in collaboration with the Afghan government. Nathaniel was published in multiple industry publications in the US and China, the latter as part of his Beijing-based joint venture with the major Chinese companies. So without further ado, let's learn more about Nathaniel. How are you today, Nathaniel?
I'm great. Thanks, Keith, for having me on.
Well, we're excited to have you. It's clearly you have a very interesting background. I want to find out more about your story for a variety of reasons. And how about we start by kind of talking about your education and your decision to earn a degree in Russian and mechanical engineering. What made you to decide to choose both of those degrees?
Yeah, so it's always on my mind to have an opportunity to work abroad, or at least just kind of a bucket list to know another language. I had an opportunity to start studying Russian in high school, and so by the time I got to college, I tested out of a couple of years. So I went for it and decided to, while studying the mechanical engineering degree, also earn the Russian degree, and I ended up going to Russia a few times, volunteered there, even as a volunteer translator at one point. I'm incredibly rusty with my Russian at this point. It's been 20 years. Never did get a chance to full-time work abroad, but certainly with our experience in China, didn't use any of my Russian in China, but just having the experience with different cultures, that was a great experience. But like I said, I always kind of wanted to do that bucket list item and went for it.
Now, what about your career with the military and achieving the rank of Air Force captain? I mean, that's pretty impressive.
Thank you. Yeah, it was a great experience, and I ended up serving as a commander for a civil engineering unit. We worked with logistics, and so when I was deployed in Afghanistan in 2012, that was predominantly my experience was around logistics across all of Afghanistan and working with our Afghan partners as well. And the people that I worked with, both fellow U.S. soldiers and airmen, but also Afghan soldiers and even people from other countries. We worked with our NATO partners. That was just something that I can't imagine. Once in a lifetime experience. I learned a lot, and I was honored to be able to serve my country. And that was my one time in active duty, but otherwise I was a reservist and working full-time career as an entrepreneur outside of that.
It's my personal belief that it's important to acknowledge the sacrifices that are made in the name of freedom. So thank you for your service in the military and for helping to protect the freedoms that we often take for granted.
Thank you.
Now, let's transition to your career and your big exit in 2013 for $120 million. Why don't you fill us in on that journey?
Sure. So, my career, really before I started to get really involved, personally with startups, was in oil and gas. And so I was a petroleum engineer. I worked as a petroleum engineer out of college, and then eventually was running the family oil and gas business after a number of years. And we transitioned the company into a technology-driven company. We brought in some outside capital, and we grew from 2010 to 2013. We grew that business more in those 3 years than the previous 30 years combined, and developed an area in Oklahoma, using horizontal resource development technology, and ended up exiting at the end of 2013. Is timing is everything, and it was a great exit, it was a great asset, and so that experience was also very informative for me because I was in the trenches. My role was leading operations at the time, and so everything that we were doing from the field, in the office, working with engineering and geology and technical disciplines, leading through that very, very busy 3 years, and we sold to a private equity backed company, which is also another touch point of experience where knowing what it's like to use outside capital to grow and develop a strategy, and then exiting to private equity backed company. So that was all kind of the beginning of a path of what is now a trend in finding opportunities to develop and using our assets and using our talent and working with our financial partners.
What are a few critical points that you learned about preparing for that exit?
Yeah, so we, the company had been around for over 30 years, so had a lot of, a lot had happened, and but it wasn't necessarily very legible, very difficult to communicate, even just internally. And so we really spent a full year bringing up to date all of our information and systems and processes, and then actually getting to where we could communicate our value. And so we had developed this tremendous value, but then need to be able to communicate it and prove it and illustrate it to potential buyers. And so, I mean, really a lot of unglamorous collecting data and putting it into an electronic system, kind of industry approved electronic systems that we could forecast and illustrate net present value. But then also tying it in with our accounting systems and really giving any potential buyer that transparency to be able to communicate the value that we knew it was there. And so there was a lot of kind of cultural change as well, where we had never had to prove our value to anybody for 30 years, and now all of a sudden we're having to kind of get ready for showtime. And so, like I say, I learned a lot, just the nuts and bolts of actually working through multiple departments and using technology to be able to better run our operations, but then also communicate to a potential buyer. But I also learned kind of the internal struggles of changing a culture that's been around for decades.
How did that experience eventually lead you to the creation of Cortado Ventures?
Yeah, so really seeing how much opportunity there was, even just beyond what we were doing, in energy, because we then started other companies after that, and I got personally involved as an angel investor, and then eventually running, doing investments on behalf of my family in an informal family office structure into alternative asset investing. And so, that experience was really the first among many that showed how important it is to be an entrepreneur if what you're looking for is to invest and back entrepreneurs, especially at the early stage, when it's difficult to illustrate value and quantify it. How important it is to be able to evaluate an entrepreneur and the quality of a team and the quality of a concept and strategy. And so having kind of lived through that as an entrepreneur, it's more art than science to be able to validate and assess a founder. And so I think that was a really important experience for me, and then saying, what if we could then adapt that skill set and that experience to instead steward capital ourselves and investing in the next generation of companies.
So tell us more about Cortado Ventures. What's its mission, area of focus, investment guidelines?
Yeah, so Cortado Ventures, we founded in early 2020, really in the midst of COVID, not in spite of it, but almost because we perceive there to be tremendous opportunity outside of traditional areas of innovation. And so Cortado Ventures invests at the seed stage, primarily pre-seed and seed, as well as Series A follow-on, into B2B technology companies that are innovating in our areas of expertise across energy, logistics, life sciences, and future of work. So a lot of the investments we make are across these foundational sectors that have a strength in the mid-continent. We consider the mid-continent right in the middle of the country, and in and around Oklahoma, where we've built our careers. And so we're looking at these foundational sectors that oftentimes relate to infrastructure, very important for long-term development of the country, but areas that may be overlooked or underfunded by traditional areas of innovation. So that's what we focus on is doing these seed stage investments in B2B technology companies.
How about the team? Who makes up the core of the team, and how did you all meet and come together?
Yeah, so it's a great story. So my co-founders are Mike Marotti and David Woods, and I've known Mike for 13 years, and Mike's known David for about the same amount of time. In fact, they were on a panel together years ago, speaking about the importance of innovating some of these sectors in the middle of the country. So this was a panel talking about it, way ahead of their time, about how these foundational sectors are ripe for innovation and development. So they met through that. And then Mike and I had a similar conversation about the need for venture capital in this part of the country. Our instincts were such that, and later the data proved that the amount of opportunity in the middle of the country relative to the amount of capital, dry powder chasing it, there's a big gap. And so the three of us really converged on that philosophy, that the sectors where we built our careers, frankly, that what the three of us have in common is we've each have been founders and built our careers in Oklahoma and in this part of the country in these very sectors in which we're investing. And so we really leaned into that as a competitive edge to say that, we know what we're looking for because we've been there and done that. And we can find and source early stage companies because of our robust network here. We have dozens of LPs that have a similar background, have all built companies in this part of the country. And so, we really kind of came together in 2019 and decided that that it was the time was right for us to step up and form what is now Cortado Ventures. And then we went ahead and did so in 2020.
Cortado recently funded an innovative healthcare company called Recuro Health, which is an integrated digital health solution that evolves healthcare from a reactive disease-focused model to a personalized proactive system. Tell us more about Recuro, more specifically, what they have to offer and why their platform is unique.
Yeah, Recuro certainly is innovating in the digital health space, and it's led by Michael Gorton, who was also the founder and longtime CEO of Teladoc. And his vision really is to bring everything that you can do, bring a hospital to the home, everything that you can do at home or outside of a medical care facility, you should be able to do and tie together on a single unified platform. And so, nowadays we have so much technology at our fingertips, right? So from our phones and wearables, at-home tests, gene testing. So there's so much information that we can get, but a lot of it is distributed or not tied together in a unified way. And so really the vision is to bring all of that home. And by doing that, really the system for healthcare that we have now is really more of a sick care, right? You wait until we get sick and then try to fix it. Whereas if we empower individuals with information, then they can make better choices and be more informed and own their own health, own their own health information and their own health outcomes. Then instead you have a more more progressive and you're really taking care of health at the outset instead of waiting until you're sick. So it's better outcomes for individuals. It saves a lot of money for the healthcare system, as you can imagine. And some of the customers that we're talking to on the B2B side are insurance companies and Fortune 500 companies, because they see the value in having an empowered and healthy workforce. And so there's already a lot of great technology out there. A lot of the pieces are there. So finding ways to tie together the best in class pieces of technology onto a unified platform is the vision for Recuro.
How did you meet the founders, and tell us briefly what that encounter was like?
Sure. So our good friends at the Oklahoma Life Science Fund, they really had been, William Paiva is the principal there, is the managing partner there, and he actually had a relationship with Michael Gorton even before, well before Recuro was ever a concept. And so that was actually just a connection through another, a fellow Oklahoman, right? So there's only two private venture capital funds in Oklahoma, and so we really worked together on that, and that was the source of the introduction, was just a personal connection, even before the company was formed. And then this vision came about. Michael Gorton had this this concept, this strategy for how to create what is now Recuro. And so we were involved early on, and we ended up funding at the very initial stage in March of last year. So the company's not even quite a year old, but that was the source of the connection, just through Oklahoma personal connection.
No, did you meet in person? Did you have a meeting somewhere, or did you meet over Zoom? What was that like? And just kind of describe the initial interactions that you had.
Yeah, so the initial meeting was over Zoom, and again, just kind of going over the deck and just the intro call, like I'm sure many of your listeners have done hundreds of times. But then we did have an in-person meeting early last year here in our office in Oklahoma City, and that was really a great important connection for us, because this is an early stage company, right? So there's nothing to point to and say, here's my traction. So instead, really being able to hear, firsthand what the vision is for the company, and also what the strategy is. So the strategy being to actually, acquiring companies that do have best-in-class technology that really fill out the whole spectrum of services that we're looking for. And that can be a challenging, strategy. It's a lot of work, right? But having that pedigree as a founder, and that background, I think, is really important to be able to make those, to be able to close on those transactions. And we start to meet some other members of the team, and really realize in those one-on-one conversations that this team has that experience, but also has that hunger, recognizing that this is this strategy is sound, but it's going to take a lot of pounding the pavement. And really seeing that that hunger, in these one-on-one interactions, I think was another piece that kind of got us to high conviction.
Why don't you tell us, what's it like working with Cortado?
Yeah, I would say we probably have. How would I put it? I guess I'll make it a contrast. So my background as an entrepreneur, having raised money from private equity, it's a very different culture. Very formal. You dress up more, right? You meet in a board meeting. I can't tell you how many times in our meetings with Cortado, there's a lot of dad jokes. There's a lot, just laughing or seemingly getting off topic, but I would argue those are important moments of getting to know each other. And we've definitely, I don't know what to compare it to, because I've never worked for another venture capital firm, but I've heard from some of the founders that we've worked with, that lot more jovial, perhaps don't take ourselves as seriously, because again, what we're doing is not so much a science, right? If it were a science, then I would just say, send over your spreadsheets of all your financials and we'll do an analysis and tell you if it hits our metrics. That's not what we do, right? And so we're really looking to make those personal connections and seeing if there is, chemistry, and then, trying to kind of bring down the barriers. And so, obviously we want to be very transparent. We've published now numerous times the kind of questions that we're prone to ask. We also have online, we have an intake form that only takes a few minutes to fill out, but will give kind of a quick initial feedback of like, is there an opening to have a meaningful conversation, or is it not a fit, and here's why. And so that way we can try to be respectful of time and get to that next phase, quickly.
Now let's just circle back to Recuro there for a moment and talk about, you met with them, you're interacting with them, you're getting information. What was it that you found most promising about the platform?
Yeah, they're well, certainly the background of the founders, but also their ability to actually be able to, the execution risk was definitely the issue for that strategy. And so even before the company had formed, they had made significant, meaningful progress on potential transactions with their first few pieces of technology that we're going to plug into the platform. And seeing that, instead of kind of the arm waving of like, there's all these companies we can talk to, and surely one of them will talk to us, but actually seeing that they're doing that work, even before there's any investment at all, even before anybody's getting paid to do it, and able to get to meaningful milestones for those transactions, right? So signed LOIs, right? Whatever they can get to actually show that there's deals to be done here, and waiting on funding, but we're also not just kind of waiting on funding to start working. The work starts now, and then the funding will actually just help consummate.
Would you say there was a tipping point for you where you said, okay, we're ready to jump in now and invest and make a commitment here?
I think it was seeing these execution ready transactions for the first pieces of technology to roll into the platform. So like really, we were very impressed with the background, with the vision. So there wasn't, besides just understanding it more, there wasn't like convincing that needed to happen. But seeing the how they were able to get these first transactions, which one of them resulted in large first set of customers, right? And so kind of getting to that good size, good scale very quickly. So seeing their ability to deliver on that, like actually physically seeing these LOIs, and that they had a vision or a plan for how to incorporate some of that leadership into their team. That was a turning point for us, because that was answering the question on execution risk.
How large was the round, and how did you determine the amount that you ultimately invested?
Yeah, so I'm trying to remember what all was what all we made public as far as the the round size. But the most recent round, I know that we published. So we had a seed round in March of last year, so not even a year ago, and then a follow-on round this summer, and that was led by Arch Venture Partners. Great partners. I mean, they've had a tremendous background in later stage companies, pre-IPO, taking companies to IPO status, and specifically across health tech. And that round ended up being well oversubscribed, north of 15 million funding, and that's enough to be able to close on the next at least 2 transactions and give ample runway. It's a little bit different, because normally when we think about just a pure SaaS company, you're looking just for the formula of how much runway do you want, 18 months of runway, and then just back calculating from there. In this case, it's different because there's transactions that are going to be capital intensive along the way, and so we're really looking at how many transactions, or what transactions will be significant to get to the next milestone, and then also factoring in your burn rate during that period of time. And really, that was the amount. And actually, I will say too that the discussion about valuation was really more understanding that the value is moving quickly, as opposed to belaboring a negotiation and a round to have and kind of migrating through or working through the issues with the round. Instead, let's have a quick round, let's close on the next few transactions, and then let's do it again in 6 months. That, I think, is maybe a takeaway from some of the listeners can be looking at, as far as how to be looking at round dynamics, because that speed is so important, that it's really proven valuable for the company as well.
I think what I'm trying to be clear on is with regards to your investment strategy. Mm-hmm. Companies come to you and they say, look, we're looking to raise $2 million. Do you have a set formula where you say, look, the initial round will come in for 250 and that's it? Or do you, say, look, we're going to evaluate this and then we're going to decide how much of the 2 million we're going to put in? I mean, how is it set in stone, or is it flexible?
Oh, that's a great, great question.
That's what I was really trying to get at, because and I'm going to let you answer that.
Sure. And so we do, when we look at round sizes, certainly if there's no term set and the company's just kind of shopping to see what the market will give them, we really look to, is this round going to be big enough to get to the next milestone? So if it's a pre-revenue company, is this going to be enough to give them ample time to have successful pilots and to get to that first commercial contract? If the company is in early revenue, if it's true seed and they're in the very early stages of first revenue, then is this going to be enough for the next milestone, which is typically to get to $1 million ARR? And so then just looking at that pipeline, looking at your previous sales cycle, and then in some cases, there's also a different customer profile that the company may be after. Maybe they built their early revenue on smaller companies, and now they're headed towards larger enterprises. So factoring in, that's going to be a longer sales cycle. So again, it depends on if it's that pre-seed or seed stage company, because sometimes we'll see a company that wants to kind of raise everything to get all the way from kind of the prototype to $1 million ARR or kind of Series A ready, and we find that generally can just really slow down the whole process, and it ends up not being a great deal for both investors and the entrepreneur. It actually can end up being more dilutive to the entrepreneur, even though it may sound nice to say, well, I'm going to get all my fundraising done now and not have to do it again in 6 to 18 months. In reality, you're going to get better terms if you just do a quicker round now and then do a little bit larger one later. So a lot of times we'll actually work with the company to right fit that, to kind of right size that. So that's a dynamic that we'll go through. As far as the level of our participation in the round, once we kind of agree on the round size, going through that exercise, then we'll look at doing really anywhere from 10 to 35% of that round. We may look at leading it. In that case, we're on the higher end, maybe in some cases up to 50% of the round if we want to lead or co-lead. Other times our role is we'll be a catalyst. We'll be an early commit. We'll be a major investor, taking up a good portion of the round, let's say 25%. And then we'll actually try to help bring in a lead. So if we kind of determine that it's maybe not best for us to lead for whatever reason, but we really want to bring in an investor who has a specialist in that sector, then we'll actually work with the company to find that right fit for that lead. And so we typically find ourselves, I think this is important, the first or among the first institutional investor in these companies. So before us, it was primarily angels and family and friends. And so that's why we view our role as very important to kind of transition the company from working with angels to now working with institutional. And how can we bring other institutional investors around the table that have the right kind of network to help the company?
In the case of Recuro, did you work with the other investors? Did you have discussions with them before investing or during? What did that look like?
Yes, so highly collaborative, and again, the lead on OLSF was the introduction to that company. So we worked with them. You even had joint meetings with Recuro and OLSF, and that's not unusual. This is a specific example of one company, but there's many examples where we will, in some cases, share diligence. Especially with the if the founder wants us to kind of help bring others to the table, or to actually have joint meetings with the founder, so we're kind of all able to hear each other's questions and really bring up our learning curve or accelerate our learning curve, so that way we can hear each other's questions and get to a decision point quicker. So yes, I can absolutely say that process with Recuro and many others have been highly collaborative with other investors in many cases.
What advice would you like to share with technology companies for them to explain their growth path to potential investors as they attempt to raise capital?
Right. So it's always harder when you're in the very early stages of revenue or even pre-revenue. And us venture capitalists love traction. And so, but a lot of times when you're investing at that seed or even earlier, it's very difficult to quantify that. We may be able to look at kind of user information, right? So it depends on if it's an enterprise SaaS, then can we point to adoption? How much potential customers are using it, and recently one of our portfolio companies, Bottle, it's an ed tech platform. they just surpassed 1 million users, right? And still pre-revenue, but have 1 million users. And so that's always a great data point. And net promoter scores are great. But we recognize that at the stage that we invest in, we have to do that legwork to reach out to potential or would-be customers. And it's very important and unique for Cortado that we have over 80 LPs, almost all of whom are CEOs and operators and entrepreneurs in the sectors in which we invest. And so a lot of times we'll actually connect an LP or many LPs to a company that we're talking to. And we generally will ask the company first, like, hey, would you like an introduction to these companies or these types of companies? Because we don't want to bog them down with kind of make work. If the founder's excited to talk to these CEOs, then great, we'll make that connection. So then it gives us a chance to see how the founder pitches, and to get that candid feedback, from our LP about, hey, I want to be a customer because this sounds really exciting and I want to do it. And the founder was great because they followed up. We get that intelligence, with the kind of knowing consent of the founder. And if it's successful, the founder now picks up their first or their third or 10th customer, or a pilot customer. And even though that numerically that traction is very small, right, going from 0 to 1 customer, we get the best insider look that anybody has on what the industry might think about that technology. So that demand-driven model, I think, is really important for how we do business.
Terrific. Now, let's share some information with the audience here in case they're interested in getting in touch with you in terms of being part of Cortado Ventures, co-investing, or if they're seeking capital. How may they reach out to you?
Sure. So our email address, I'll give you a few ways, is just investors@cortado.ventures, investors@cortado.ventures. But also we're on LinkedIn and Twitter as Cortado Ventures. It's just nobody else had it. Nobody else had that handle, so we're just Cortado Ventures. It's nice. I'm on Twitter as Nat_Harding, NAT_Harding. So really those are great ways to get a hold of us. But we're on a lot of platforms to try to be out there. But to give specific something that your audience can actually write down and shoot us a note, that's the way to do it. On our website, which again is just cortado.ventures. We have a lot of information about the kind of deals we do, round size, check size. We try to give as much of that up front as we can, and then have a 3-minute intake form that founders can fill out to quickly see if there's a fit.
Well, thanks, Nathaniel, for joining us and sharing your experience and having the interview. Greatly appreciate you sharing your time and your experience. We want to wish you the best, and the Cortado team in all your projects and future endeavors. And we look forward to hearing more from you.
Thank you, Keith. It was a pleasure.